Welcome to Georgetown University and the Mcdonough School of Business. I'm Reena Agrawal. I'm the Robert Mcdonough Professor of Finance and Director of the Georgetown Center for Financial Markets and Policy. I'm also the Vice Provost for Faculty at Georgetown University. As most of you know, Georgetown is one of the world's leading academic and research institutions, offering a transformational educational experience that prepares the next generation of global citizens to lead and make a difference in the world. Okay. Housed at the Mcdonough School of Business, the Center for Financial Markets and Policy, we provide thought leadership for global finance. At the Mcdonough School, we really believe in excellence in research to impact practice and policy. It starts with excellence in research. That's a prerequisite, but we don't want it to stop there. It must impact, our work must impact practice, policy, the global community. Okay. Through our activities, the center contributes to an informed, solutions-oriented approach on issues that are critical for global financial markets. We really do believe it's the responsibility of Georgetown University to provide unbiased analysis that can guide market participants and policymakers. For example, we do these congressional policy briefing series on Capitol Hill, and what they tell us is we get a lot of information, but when you, Georgetown, come in, we know it's unbiased. We know you're presenting both sides. And the other thing that happens is because we are an academic institution, they don't feel intimidated asking us questions. Okay? Sometimes with industry, they'll feel intimidated asking questions. So with us, they don't feel that way. We are professors, and we bring in different perspectives to the table. So the center is celebrating its 10th year. We go back to 2009, the same year that we actually moved into this building, okay, the home of the Mcdonough School of Business. Okay. The students in the room might not fully comprehend what happened in 2008, 2009, but others in the audience can and probably have vivid memories. I certainly remember September 15th, 2008. I was in New York, standing in front, across from the Lehman building when Lehman declared bankruptcy. Okay. That is the time when it really, it was kind of heartbreaking to see employees of Lehman coming out with their boxes and their belongings as Lehman declared bankruptcy and everything else that was going on at that time. Okay. There was so much uncertainty. There were important regulatory changes that were being proposed. And unfortunately, financial sector executives, they had lost credibility, right? And they didn't want to speak up. And at the same time, policymakers were very focused on how do we take care of this crisis? There was a real leadership void in the world of finance. This is how the Center for Financial Markets and Policy emerged to fill this leadership void at a critical time. And as you might remember, Washington, D.C., I would say, unfortunately, became this new global financial hub. Everyone was trying to come to Washington because Washington was going to influence global finance even more. The center's first event was actually right here in this auditorium, and it was in partner with Financial Times. And I remember very clearly, it was for the inauguration of this Hariri building. The title of that event was The Future of Global Finance. It was issues about who is going to be the next leader in global finance. If you remember at that time, a lot of conversation about the BRIC countries. Okay? And a lot of conversation about regulation. We had just had that huge financial crisis and what new regulation was needed. So we started our conversations with issues like too big to fail? Who is going to be a SIFI? Who is going to be a global SIFI? And what will it mean to be a SIFI? All about systematic risk, all about Dodd-Frank for the next couple of years. What are the implications of Dodd-Frank going to be? We've always addressed issues about capital market structure, as we're going to do today. We've always talked about capital formation and jobs. That's so important for the global economy. We've been very interested in shareholder activism and proxy voting issues. And then there's been passive, active, ETFs, volatility, and so on, a whole lot of market structure issues, heated debates between senior executives of exchanges on different issues. They agreed on some, they didn't agree on some, made their way to the Wall Street Journal and other places. Big debates we've had about the SEC's limit up, limit down rules. Huge conversations about high frequency trading. Okay? And very nicely, it was guided by some of the research and scholarship coming out of the Mcdonough School. We've also transformed ourselves as global finance has changed. In addition to market structure, our focus has been moving towards fintech, for example. We are very interested in ESG issues, right? That has become extremely important for institutional investors, global finance, issuing companies. So we've been moving as the world changes. We also transform the center and the issues that we're taking up at the center. Just to give you an example, as many of you know, we hold the DC Blockchain Summit here in March. And again, this room tends to be packed for that. We've conducted studies, for example, with the World Economic Forum on the complex regulatory framework of global fintech. Right now, we have visitors from the Japan FSA and their fellows at the center, and they're here because we're in Georgetown, and we're here in Washington, and they're working on regulatory issues, thinking about Japan, on fintech and blockchain. We just signed an agreement with the Department of Commerce, their ITA, that's the International Trade Wing, and we have a partnership with them. We did a closed breakfast meeting with public-private partnership on competitiveness of US markets, specifically in the blockchain area, especially from a regulatory point of view. How do we get our act together from a regulatory policy point of view? And this was closed door. This was not open to the media. And we had a lot of people from the Hill and Treasury and the private sector attending this roundtable discussion. So we're doing a lot of things here that are very exciting. Most importantly, we couldn't do it without your support. So I'm most grateful to you for the support. We've had strong partnerships with so many of you, the FTSE Russell Group, FINRA. We're so delighted to have Robert Cook here once again. New York Stock Exchange, NASDAQ, BlackRock. I could go on and on. I do want to thank our sponsors and participants, which includes BlackRock, Alerian, Emergent Technologies, FINRA, FTSE Russell, Global X, KPMG, Ripple, MSCI, New York Stock Exchange, NASDAQ, Morningstar, Gemini, Presidian, GTS, OCC, Vanguard, World Federation of Exchanges, IndexIQ, Invesco, SEC, CFTC. I could go on and on, but I really do appreciate all of the support. And as my colleague, John Jacobs, would say, there are only two groups in the room today. Okay? Those who support the center and those who will soon support the center. If you already aren't, you'll soon support the center. Okay? We are absolutely thrilled to have John as a part of our team here. I also want to thank our finance faculty, my colleagues, who help out in many different ways here. And the person who's responsible for pulling all of this together is right at the back there, Anna Kormus. Anna is the assistant director of the center. Please, in a minute, let's thank Anna, and I want to thank our marketing and communication staff, which includes Molly and Lauren and Ashley, Chris and Teresa, the whole team. We really work together as a team, faculty, staff, the dean's office. And so Anna, thank you for all that you've done. We have a great set of speakers. I hope you'll find the discussion today informative, and this will lead to a solutions-oriented approach as we move forward. Now, it's my distinct pleasure to introduce Paul Almeida, the Dean of the Mcdonough School of Business. Dean Almeida.
When I think of Georgetown, I think of, and the Mcdonough School of Business, I think of a place where it's natural for professionals, policymakers, academics, alumni, students, faculty to get together and talk in serious ways and knowledgeable ways about big issues facing the world. And not just big issues and big challenges, but the solutions to these issues and these challenges. And so I'm really grateful to all of you for traveling from near and far. I just met someone who flew in from China. So if you think you woke up in Virginia and Maryland and deserve thank you, think again. But seriously, to attend, thank you for attending the Financial Markets Equality Conference. I know you'll enjoy listening to our speakers, interacting with one another, learning with one another. We have an outstanding faculty participating today, including Rohan Williamson, Turan Bali, Jim Angel, Alberto Rossi, I saw you somewhere, and Sandeep Dahiya, in addition to, of course, Professor Reena Agarwal. Now, I think most of you know that Georgetown's an old institution, over 225 years old. And yet, we take pride in being always at the cutting edge of innovation in education, and always focusing on why we exist, to serve the common good. Now, we're often rated as one of the leading business programs in the world, including last year's survey of recruiters by Bloomberg Businessweek, which ranked our graduates as the best trained graduates in the world. Now, rankings you should take with a pinch of salt, usually, especially if you don't like them. But I interact on a daily basis with our alumni, our students, our faculty, our staff. And I can tell you, we have 100 reasons to be proud. But we are incomplete without you. We exist because we interact with the world, and we're going to make a difference to the world. We exist because the world faces huge challenges. And we, by working with you, by discussing complex issues, we can make the world a better place. So that's why I'm particularly proud about, being the dean over here. Now, a key to the success of the center, which is 10 years old, has been its ability to leverage the distinct qualities of Georgetown Mcdonough and to create opportunities that few other schools can match. The center collaborates first with other schools, areas of expertise across Georgetown, brings together scholars across campus to tackle issues, including those on financial markets and policy. The center leverages our location in this wonderful global capital city by sharing expertise within the community at events like this conference, by testifying on Capitol Hill, by collaborating on research projects where faculty and students tackle real-world issues from organizations like the World Bank and the World Economic Forum. Additionally, the center draws from our global alumni network and professional networks of our faculty to create partnerships with leading organizations like the US Department of Commerce and the Digital Chamber of Commerce and several institutions in the private sector. They also build their content in the classroom and in the business community within the Jesuit tradition of academic excellence, ethical leadership, and care for the common good, something that is deeply needed in a rapidly changing and sometimes confusing world. I would like to, again, thank Professor Reena Agarwal and her finance colleagues, thank John Jacobs and the entire center team for all you've done to accomplish such success. We know you concentrate on excellence, and I know this community here and beyond will continue to be a part of your center for many years to come. So I hope you all have a wonderful day. I hope you get a little closer to Georgetown and Georgetown Mcdonough, and we'd love to have you back again and again. Thank you so much.
So we'll start off with our first fireside chat, and Professor Rohan Williams will lead it off.
Good morning. I'm Rohan Williamson. I'm a professor of finance and the Sullivan Dean Professor of International Business at Georgetown. My areas of focus are corporate governance and risk management and also international finance. I've been here for 22 years, which I was reminded of earlier by Mr. Cook here.
Sorry about that.
And I would also want to congratulate the center for, now we just call it the center when you've been around for 10 years. And it's such great work. Now we just say the FMQ, which we know exactly what that means now. That means a point of success. But this is our first fireside chat with Robert Cook. If you're going to do a conference like this, this is one of the most important and knowledgeable people to have a conference here. So Robert Cook, he's the president and CEO of FINRA and chairman of the FINRA Investor Education Foundation. A couple of stints in regulation as a private attorney, and again, a few years at the SEC as the director of the Division of Trading and Markets. So this is someone that's quite knowledgeable, graduate of not Georgetown, but of Harvard University, so that's okay. And so we'll spend a few minutes covering a few things here. We'll kind of start with a little bit of the technology side and what technology has been used for, then move on to other issues. So let's talk about first, Robert, the surveillance and how surveillance changing and what role is technology playing in market surveillance.
Well, first, thanks, Rohan, for doing this with me, and Reena and team, thanks for including me again in this terrific conference. We're really delighted to be part of it, and congratulations on having such a robust agenda. Surveillance, and how does technology affect surveillance? I mean, this is something we spend a lot of time thinking about at FINRA. It's had an enormous impact on our programs. So as you may know, part of FINRA's role as a frontline regulator of the securities trading firms is that we have to monitor their trading activities and looking for things like compliance with rules, customer protection rules, market integrity rules, trade reporting rules, et cetera. And that means that we're looking at 48,000 products. We're looking at 1,500 broker-dealers. There's a lot more in the FINRA membership, but we're talking about a number of broker-dealers who are trading securities actively, 60 ATSs, 19 exchanges. So as you might imagine, a lot of data is entailed in pulling together this information about all these different products executed on all these different venues. And in fact, we couldn't do this to pull in that data we discovered if we didn't migrate to the cloud. So about 5 years ago, we began a journey of migrating our infrastructure into our technology architecture into the cloud. And we started with our market oversight area because that is the area of the biggest amount of structured data. And we've since been migrating the rest of our applications into the cloud as well because of the efficiencies and enhanced security we think it provides us. So it's sort of a question of how could you do it if you didn't have the computing power that the cloud offers. If we had our own private database or servers and everything else, we couldn't scale to that size. We routinely have been bringing in, say, last year, upwards of 100 billion messages a day. We have many petabytes of information. And that's before we became the processor for the Consolidated Audit Trail, and it's only going to get larger. So the cloud migrations really enabled us to be able to handle data at that scale. But it's also helped us develop and roll out better surveillance techniques and tools, including artificial intelligence and machine learning, which we are now implementing. We have about 300 different algorithms we run on this data all the time, looking for 400 different types of threat scenarios. By pulling all this data together, we're able to see things that we hadn't been able to see before in terms of whether there's trading activity that might be happening in one venue that's connected to activity that's happening at another venue. So it's really made it's been transformational for us in terms of just being able to keep up. We have a lot of work still to do, and we're investing a lot as we move forward into further developing our machine learning in particular and artificial intelligence capabilities.
Okay, and is that fully enforced, or we're still trying to get to doing everything on the cloud and with AI?
So we're all fully in the cloud, and we have a number of patterns, we call them, which are surveillance tools that are in production. That are reflect machine learning, and that's sort of an area we need to. You can't have analysts looking at spreadsheets when the spreadsheets would be trillions of rows.
Right.
And we have that capacity to pull that kind of structured data together now, but we need tools that help identify outliers. And one of the areas that we've been finding most helpful are visualization tools. Now, we have people, some of them in this audience, who are spend their time at FINRA working on this, and I'm not going to pretend to be the expert on what they're doing, but I can tell you, I go to Rockville, where our main campus is for this work, and I look over their shoulder as they're looking at it, as an analyst is looking at a screen. And the visualization tools allow you to see patterns that they then would dig in on. And I don't know exactly what those patterns are, but I can see from the tool that, okay, there's a cluster of unusual activity over here. That suggests there's something, something going on that needs further. So those sorts of techniques to help our analysts discover what's going on more quickly are vital. We have of course, this is going to be a continued area of investment for us, both in terms of our people and in terms of our technology.
Okay, now another hot technology, or a couple of technology issues, are fintech and regtech, and how are those how those applications, both applications, operating within FINRA and the use of those?
Yeah, so we kind of approach this from wearing two hats. One is as a user. The second is as a supervisor of these activities in the industry we regulate. So as a user, and those two hats are really complement each other. We learn a lot about what's going on, new techniques through our oversight of the industry. We also learn about things to watch out for from our own use of this technology. So we see enormous opportunity in regtech and fintech, both for on the fintech side. Basically, our approach, our philosophy is that there's lots of opportunity that's presented by fintech to enhance the customer experience, to potentially offer new products or services that might not otherwise have been available, to do this at lower cost, for firms to have operational improvements, maybe better risk management, and so forth. But we want to look at it through the prism of, are we making sure that while these potentially create opportunities for investors and for firms, are we watching out for investors and making sure that they're being protected? And trying to strike the right balance between accommodating innovation, but also keeping our eye, closely on, are there risks that are being posed for investors? So in terms of our external engagement, we have a variety of whole infrastructure of committees and the like to kind of engage with the industry to make sure we're sort of keeping up on this. We have a emerging regulatory issues group which studies these areas and then puts out papers which people can then comment on. We've done one on the blockchain. We've done one on on reg tech and fintech and other soup tech. Seems like you just add tech to anything nowadays, and suddenly it's of great interest. But so that's part of it. But I mentioned our own internal use. So I talked earlier about our work using structured data, large data for all the trading that happens across the markets, particularly the equity markets. We also have a lot of work that involves much less structured data or unstructured data in our basic day-to-day oversight of the sales activities of broker-dealers and brokers. And what we're exploring there is how can we develop our analytical tools to assist our regulatory staff to identify patterns, to look for problems, to be able to work through large amounts of material more quickly. And so what we set up about a year ago, a little less than a year ago, and it's really beginning to ramp up now, is an R&D function for analytics. And the idea is, you have to invest in this stuff to make it successful, and you got to be willing to make some mistakes and take some risks. If you're going to drill for oil wells, you drill a lot quickly, and then some will pay off and some won't. But what you're trying to do is identify areas that you're going to go and invest in. So we have this whole pipeline of ideas that come into this R&D function. Those ideas come from just any of our staff. They come from a create-a-thon we have every year that brings together the business and technology teams. And once an idea gets qualified as, that's worth spending some time and money on, it goes into a 3-month process where we try to develop a proof of concept and see whether this is worth pursuing. And then if it is, then it would then go into development and production. But what we've seen is this has enhanced the level of engagement between the business and the technology sides of the shop. And it's also brought forward some really amazing ideas. I was just at a presentation yesterday in our Rockville office where we went through kind of the latest ideas that are in the pipeline. Everything from how can we redact information that comes in that might have sensitive elements to it, like social security numbers. And when we do normal, as any regulator, we collect maybe records from a broker. So there might be some sensitive information. How do you redact it? Is there ways you could use machine learning or natural language processing to be able to do that more quickly and effectively? Or how does, if you look over the shoulder of an examiner or a regulatory analyst in their day-to-day work, and they pull in information from Google, and they pull in information from, the firm's website, and they pull in this information. What if we track that and follow it and then automate that and see how we could, be able to have all that happen and then produce the information for the analyst? So there's some really exciting ideas coming out of this analytics program.
Okay, fantastic. Now, another hot area I'm sure everyone is interested in is blockchain. And what's FINRA's role in sort of creating a comprehensive, coordinated blockchain regulatory regime?
Yeah, it's an interesting question, the way it's phrased, role in creating a coordinated regime, because my sense, talking to a lot of people who are in this area, is that that's what they'd like, right? Can we just get all the regulators together and figure it out and give us a pathway, and we'll do it, right? Just tell us what to do. And I think one of the challenges is that every regulator has its own jurisdiction. And so we think our role in part is to try to work very collaboratively with fellow regulators to make sure that we are sharing information and developed a coordinated approach. I mentioned earlier that we've also invested in kind of trying to learn up on these issues, including putting out papers on them for that purpose. But I also think we have to have a certain humility because we don't regulate everything. We have an important role as a regulator, but we're not the federal regulator for one, right? And I think this calls for more the approaches would be better if it's led by the federal regulators, because then it's going to be more of a unified system. And in addition, there are aspects of blockchain type products that wouldn't have even ever fall within FINRA's jurisdiction. That said, there are some that do. And so one of the sort of narrower areas, but important areas where FINRA has frontline regulatory authority is authorizing firms who have a blockchain-based model that involves something to do with securities, sales, or trading, or say offering new ICOs or tokens or products like that. And so we have been working together with the SEC to sort of begin to understand and think about what is the appropriate regulatory framework for those sorts of models. We issued some guidance together with the SEC about the roles that broker-dealers can play there and where there are some issues that still need further work. A lot of the issues that are in that guidance and that still need to be resolved are frankly aren't FINRA issues, they're SEC issues. So we're kind of trying to work with the SEC as the industry works with them to figure out, are there paths forward for things like business models that involve more challenging aspects of the use of distributed ledger technology, like clearing or record keeping or custody of assets. But that said, following that issuance of the guidance, there was a path forward for firms who just want to act as sort of intermediaries or brokers between others who are trading. And so we have authorized a number of broker-dealer firms to either become FINRA members or to change their business model to, in either case, where they would be acting as intermediaries in the ICO space in particular.
So kind of switching gears a little bit here in this investor education. One of the broader societal concerns, if you will, is the fact that most Americans, most investors, they don't understand investing per se. And so we are in need of some level of investor education and this broader issue of financial literacy. So is there something that FINRA is doing in this area to deal with this issue?
Well, yes. So FINRA has an investor education program office that works in this space, and then there's the FINRA Foundation, which is dedicated to investor education. And we do a lot of research. We support various projects. We have materials that go on tours through libraries. So we engage with a lot of other players in the investor education community to collaborate with them. So there's a lot going on. But I think to your point, part of what we've been doing is supporting research. And we have a national financial capability study that we've been doing for several iterations now, and then some other research. And it absolutely highlights the concern you're raising. There's so many more investment products, and many of them are very complex. So investors have to navigate their way through all that. And on top of that, we have, obviously, people are more responsible for their own retirement now than ever before. Exactly. And that aggravates the challenge because they don't have defined benefit plans to be able to rely on. And so it's important that we understand what's happening here, and at least our research shows that we do have a lot of work collectively to do on this front. If you look at the National Financial Capability Study, it suggested that while there have been some areas of improvement over the last few years, there's some gaps that are persistent. So not everyone has improved in the same way. Whites compared to African Americans, the progress has been disparate. Men have an easier time making ends meet than women. College educated, it's easier than non-college educated. And so some of those gaps we see in our trend analysis widening. And in terms of financial literacy, we also see the same concern, in some ways a decline of financial literacy as measured by the ability to answer some basic questions since the Great Recession that Rena was talking about. And so that's a challenge for all of us. And one of the things we also see in the data is that not many people report ever having had access to financial education or investment education. And of those who do, not many take it up. And so, ways that we could provide more of that is something I think we should all be thinking about to investors through the workplace or in other contexts.
Okay, fantastic. Now, we're going to take a couple of minutes here for Q&A from the audience. And I will ask, as you approach with your questions at the mics that are posted in the aisles, that you introduce yourself, just give us your name, and pose your question. Do we have any questions? Yes, sir.
Good morning.
Good morning.
Good morning.
My name is Rajiv Bhattacharya. I'm a professor at Hopkins. A quick question for you. How much do you like to ensure that markets are actually efficient? and what methods do you take to measure them, and what the enforcement and regulatory regimes you have in place for that? Thank you.
Sure. So first of all, just a caveat that FINRA is but one regulator in this overall ecosystem of regulation under the umbrella of the SEC, of course, whose mandate does include efficiency of the markets, but also the securities exchanges, who play a vital role in both not just operating the exchanges, but in regulating and overseeing the markets that they operate and the trading on those markets. And so, our focus is to work in tandem with them. And part of the standard that we think we need to meet when we're sort of looking at a rule or thinking about a policy initiative is what's best for investors, but ultimately, part of that is fair and efficient markets that operate with integrity, markets that investors have the confidence to participate in. And so, as I think, as the question suggests, there's a lot of competing aspects when you're doing policy about, how much weight do you put on the different variables. But the overall efficiency of the markets, liquidity, information, access to information, transparency, these are pretty fundamental to a lot of the programs that FINRA operates, and certainly the ultimate efficiency of the markets is one of the key drivers of our decision making. I don't know if that's responsive.
Okay, go ahead.
Kelvin Toll at Data Boiler. And this question is related to the FINRA CAT projects. And it has been long identified by the International Organization of Security Commission, saying that, okay, how do we review across order books, especially when the timestamp is only like 50 milliseconds, plus or minus. There could literally be thousands of trades happens during that plus or minus 50 milliseconds. How FINRA is preparing to review those across order book?
Well, you mentioned the Consolidate Audit Trail project, which FINRA is the processor for, but it really is the project that's being built by the exchanges in FINRA, and it's really mandated by the SEC. So ultimately, the SEC's rule provides guidance on a variety of aspects of the implementation of the Consolidated Audit Trail, including timestamping. And there's a lot of thought that's sort of gone into establishing some basic requirements to provide more uniformity of and consistency of timestamps. Given things are constantly moving faster and faster, at what point does a timestamp become too wide a period of time to be able to capture trading within it? But I think the Consolidated Audit Trail is going to be a significant advance forward in terms of that particular issue, and they'll be continued to be looking at things like time drift and other aspects that could affect the validity of the data or the analysis of it.
Thank you.
Thank you.
Okay, here, please.
John Davidson, Options Clearing Corporation. So FINRA is a U.S. self-regulatory organization. You've talked about the mandate. The markets are global, and there are a fair number of U.S. investors who participate outside the U.S. What's FINRA's role in that regard, and how do you cooperate with similar organizations in other countries?
Well, thanks, John. John and I have known each other for decades, working on various projects going back to the rollout of portfolio margining. But as John alluding to, we're a U.S. SRO. So when we talk about collaborating or coordinating with other regulators, there's a little bit of a challenge because we're kind of an odd duck. Not every other country has SROs at all, or SROs like FINRA that is not operating a market, and it's a not-for-profit entity. And so there are some other countries where there's an analog to FINRA, Canada being the closest example. But that said, given our focus, particularly our focus on market oversight and on retail investor protection, among others, we have a lot of touch points with regulators around the world. And so we participate in a variety of ways with them to develop the ties and connections we need to, and to make sure we're sharing information where appropriate. We participate in IOSCO's working groups, and a number of them were have a permanent seat as a party participant. We also have various business conduct roundtables and other types of regulator-only sessions that we do with regulators from around the world to talk about, hey, what are you thinking about? And it's a fascinating conversation. I was just attending one a couple weeks ago in New York that we were hosting with regulators from around the world, and the discussion really was about how can we use fintech and analytics and other tools to enhance our work. And there was a lot of great ideas that were popping off. As one party would say, hey, we're doing this, oh, we could try that. So we find that type of interaction incredibly valuable. And the interaction also goes into areas of oversight as well, where appropriate, including enforcement activities.
Okay. Question here.
Good morning. My name is Jenny Bai, Associate Professor of Finance in Georgetown. I'd like to hear more information. You mentioned the analyst program. We know the equity analysts provide very useful information for academia and the industry, from their forecast, earnings, and deviation, all of this information. So credit analysts usually have some unique information, what do they care about. Is this analyst program in FINRA will try to do something? I'm just curious, what exactly is the background about that? That's my first curiosity. Second one is recently FINRA started to put the treasury bond trading put also on their platform, which is similar like the corporate bond, which FINRA already did. So far, I know it's highly restrictive data only to the Federal Reserve Board, some selective people. I wonder what is the motivation for and the goal for FINRA to bring the treasury bond transactions into the platform, and to what extent academic people can access that to do more research related. Thank you very much.
Sure. So just on the first question about our analysts, just to be clear, I'm talking more about regulatory analysts who are looking at trading data and trying to look for patterns of manipulation or noncompliance with rules, as opposed to how that term is often used in the industry, like analysts of the credit markets or something like that. So we're really focused for now primarily on how do we look at the data we have, structured or unstructured, and figure out ways that we can be quicker and faster and better at identifying areas of concern or red flags, and then being able to follow up on them. I think the other initiative you're referring to is, we call it Trace for Treasuries. It's the initiative to require reporting of treasury bond trading that was rolled out a couple years ago. The impetus was some trading activity in the treasury markets that led to some concerns about what's going on and do we have adequate data. And I think as the federal regulators got together to look at that, they realized that the answer is no, we didn't have good data as a regulatory community to be able to monitor or examine for behavior that might be of concern in the treasury bond market. So the idea was, FINRA was already operating a trade reporting facility for corporate bonds. Let's add treasury bonds into that. And this is really an initiative obviously very important to the Treasury because of their role in the Treasury market. And we really are working under the SEC. And so in many ways, we're sort of taking guidance from the Treasury and the SEC and the Fed about where they want to go with this initiative. Right now, it's just pulling data in and being used for regulatory purposes. We are not currently disseminating that data out to the industry or to academics. I think the expectation is at some point in the future there may be more transparency around this data, but there are important questions about how would that transparency occur, and what has to happen before it's appropriate to be transparent. Right now, we're only collecting data, for example, from securities firms, not from commercial banks, who, because they're not our members, we can't collect from them. So there's a question about whether it's appropriate, for example, to provide one category of market participants trading information, but not in others. So there's a lot of questions about that, and I think the Treasury is spending a lot of time thinking about that, and we'll be taking the guidance from them in the SEC about where they want to go with this initiative.
Okay. Robert, thank you very much.
Thank you.
That was a fantastic fireside chat, even though we don't have the fire.
Yeah.
I wanted to thank you from the on the behalf of Rena and the Center for coming here in a fantastic opening discussion. And we hope to see you back here very soon.
Thank you. Thank you for your questions. Appreciate it.